What's up, everybody? Dave Bartosiak here, and I've got another chart of the day now. Usually, I'm talking about individual stocks because we find some cool ones that everyone's talking about. But today, I got to talk about something else that everybody's been talking about, and that's gold. So I'm going to take a look at GLD, which is the Spider Gold Trust here. And I busted out the moving average ribbon here so that I could place different, 4 different moving averages here very quickly. And I can incorporate the RSI in the bottom end of the chart. Now, again, this is just the interactive charts page on Zacks.com. So it's free to use. And it's the free version of TradingView. So this is one way to sort of game the system and get access to more indicators. So I have the 20, the 50, 100, and the 200 all on this chart. And you can mess with this a little bit. If you scroll over the moving average ribbon, you have a little settings tab here. And I love to use the 50 and the 200. So I can do that. I could just take this one out, take out the 200, take out the 20. And I can even change back to the colors that I normally use, which is, a blue for the 50 and a red for the 200. And there you go. So boom. So now this is looking a lot like my usual chart. But we have the RSI here. So this is the relative strength index. So basically what this does is it calculates where inside of the bar these daily closes have been. And as they're closer to the top of each bar, then you start to get higher ratings. And if they're closer to the bottom, you get lower ratings. That's the basic mathematics behind it. And it's over the last 14 periods. So the last 14 days. And here we can see periods where, GLD has certainly been overbought from an RSI perspective. That didn't mean it went down. We have this overbought and still rallying, overbought, still rallying. So really just tells you how strong this gold rally has been. And you really only had one nasty, well, not nasty dip, but you had one real pullback recently. And that's from late October to early November. You can see that RSI really coming down along with the stock price. So where are we now? We've got another overbought RSI. Now, GLD here at 280. Gold is at 3K. I know I'm so good with my mouse drawing, right? Gold is at $3,000. So something that everybody's talking about. And the reason being is gold prices tend to move along with interest rates. So if you can think of gold as a central reserve currency with a 0% rate that it pays, then it kind of makes sense that as interest rates go down, that gold prices kind of go up. So that's what this part of this anticipation is. Also, of course, you get the anti-fiat money trade that's taking place. So a lot of stuff to cover. Now, you could draw some giant fibs here. From this low all the way up towards the highs. For me, I think that's not great to look at because until this thing kind of rolls over, you're not going to get any really good solid targets from it. So I don't like doing it that way. But what I do like is using this most recent move. So we can go from December 18th low to this high. And again, we're going to go in here and go into some of these settings. And we can use not just the fib retracements, but the fib extensions. So extensions are going to, in this case, going to go over the 0 line. So we're going to use negative numbers to do it. So let's go ahead and do this negative 0.385. There's a negative 0.5, but I'm going to change that one. Actually, you know what? Even better. Let's change the 38.2 to the 23.6, show that point. And then now we'll change the 50 to the 38.2. And then let's, that'll work. That works. Okay, let's just use those two. Now you can see how this most recent move, using that as your sort of pivot point, has now gone straight to that 28.3% extension. So you can use these fib extensions as top side targets where there's likely to be a little bit of resistance. Now, we're like looking into the future with a crystal ball here, and that's a target here is at 285.44. And again, we can get real granular with this, and I get the exact low here and the exact high here, but just ballpark stuff. A little bit over 285 is your first target. So I want to show how this has worked in the past. So now let's just look at this move from the February lows, and let's go. Oh, we can go here for it now. Let's go straight to this high. Okay. So now here we see a little bit of selling off. Got close to that 38.2. Failed at the highs again, had a little bit of consolidation at the 23.6. Again, peaked up above, was chopping around. You have this 50-day moving average that came into play. And look at how the 23.6 extension provides a little bit of resistance there. You see that, right? Kind of bumps its head, can't quite do it, and then finds its way over. But it gets even more interesting when you go to this 38.2 because it broke up above it and then came down to retest it. We can zoom in on this a little bit to hammer this home because that's kind of crazy, right? Look at this. There's no moving average here. 50's down here. It just seems to bounce off of some magic line. And you're sitting there scratching your head like, well, what the heck? How is this bouncing off this? Remember, these extensions come into play. So that 38.2 extension was drawn back here and came into play all the way over here. And I'm sure, why don't we do that? Let's mess around with some other extensions and see if we end up taking this and this. So let's do that. So all you gotta do is click back on it. You get your settings again, and let's do it. Let's get a, I don't know if the color gradient's going to be good. I don't know. We'll see. All right. Let's go ahead and do -0. That's a 3, 0.5. Let's put that one in there. And then, like I said, these colors are going to get weird here. And then let's go -0.0 or 0.618. Put that one in there and see what we get. 50% extension is kind of where it stalled out. Caught that bounce, makes its way through. And again, you get this breakout above this 61.8 and then a retest of it before it went higher. And again, we could keep drawing these things, but just so interesting how they end up coming into play over the long term like that. So then, like I said, we can do that looking at the latest move and kind of experiment and see what pops up for us. So we go from these lows to these highs, and here are some levels to look at. So 285 and change, 289 and change, a 293 and change. So something to keep an eye on for those top side targets. And then, of course, you still have the 50-day moving average that right now has been pretty supportive of the price. But if you notice on GLD, you don't, it's not as firm of a support or resistance level. I mean, there are times where it has sort of bounced off of it, but for the most part, it seems like the price actually kind of meanders up and down around that 50-day. It's like we overshoot it a little bit, overshoot it to the downside, which we did here. And we're still up above it here, overshoot to the downside. See what I mean? So it's not as strong a point of support or resistance as it is on other charts. And I've noticed that with some commodities where it just kind of tends to overshoot a little bit and go the other way. So there you have it. That's my outlook here on gold. And of course, this correlates to different levels in spot gold. So you can pull up, I like to do XAU USD, that's spot gold. So you can see where that level is. But you can use anything that you like. You use the gold futures if you want, or whatever. This case, I'm just using GLD. Obviously, they have a really strong correlation since this is the underlying base metal is the same. But heck of a rally here, running into a little bit of resistance, but it hasn't really been rejected yet. So it looks like it could go higher, even higher, and those are a couple of levels. All right, folks, for everybody here at Zacks.com, thank you so much for checking us out. I'm Dave Bartosiak, and we will see you next week. Have a good one.